Hello and welcome to Asking for a Trend. I'm Jared Blikre, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. It was a wild week for markets, from a major rout driven by tech to the Dow closing above 50,000 for the first time ever. We're digging into the trading action. And Roblox shares rallying off the heels of earnings. Conversation with the CEO is ahead. Plus, it's Super Bowl weekend. We're looking at how people will be spending as affordability is top of mind for consumers. And another round of volatility in the market. The first trading week of February seeing major market swings as investors rotated away from tech and into defensive and cyclical sectors. Here with a closer look is Henry Schwartz, Cboe, VP of Derivatives Market Intelligence. Henry, what a week. Thank you for joining us here. Break it down for us. What do you think about all this?
I mean, February is exhausting, and today's the 6th, right?
Yes,
so,
yes.
We saw, today, I'm honored to be here basically on Dow 50,000 day.
Break out your hats.
That is, I should have brought confetti. That's a big milestone. Mm-hmm. And, what's wild is 2 days ago, the mood was pretty bleak.
We're looking at Dow 40,000, right? Or zero.
The sentiment shifted, and as it does, it's shifted on just so quickly. And I was actually on a podcast talking about volatility was elevated, right? We saw the VIX over 22, almost 23, the highest levels we'd seen in November. And VIX is a measure of forward volatility expectations.
Yes, 30 days.
And I was mentioning, you have to remember, people call it the fear gauge, right? Oh, the market's getting nervous. But volatility is a two-way street, right?
Yes.
That just means that the market is expecting to see moves closer to 1.5% to 2%.
Could be upside volatility too.
Exactly, and really that's today that is absolutely what we got. And that surprised a lot of people.
I've been asking a number of guests this recently, and we're kind of ties into the current situation. We've seen such quick moves off of the lows, starting with the pandemic, really. I think that's when it started in 2020. We had a 2022 bear market, so that lasted a bit longer. But then in April of 2025, we saw this huge rebound, and it put the pandemic rebound to shame. Is everything just speeding up? And what does that do to investor psychology? Is this just setting us up for, a lot of pain when we have a long, protracted bear market?
Well, 2022 was a bear market,
yes.
and we all survived it. But I would say that, buy the dip really has become a reflex for a very, very large part of the trading population. And, people that have been trading for 5, 6, 7 years, this is kind of all they know. In 2022, even though it was a bear market, the market did slide about 20%. It was kind of a very gradual slide. It wasn't.
Yes.
We did not have like a crash, dislocation, scary kind of moment. It was very calm. In fact, the Cboe data shows that people that were short puts in 2022 actually still did okay. They actually still made money.
That's interesting.
because it just happened very smoothly. Mm-hmm. So this is another example of buy the dip, and I think it's a little different now this time around. And we were talking about this a moment ago. The dynamics with the silver and gold and Bitcoin,
Sure.
It all plays into it. And then we had all the Mag 10 earnings hitting basically over the last 7 or 8 days. And so market was digesting a lot of information. And I think in the end, hindsight is 2020. It did look like some sort of an oversold situation because man, when we started to lift, you could feel the people piling in. The FOMO.
It reminded me of April 9th. Last year, and that was when the NASDAQ was up 10%. So it wasn't as big as that, but it was kind of a big day. And so I'll give it that.
Yeah.
What about, and just kind of keeping in the same theme of these markets speeding up, zero-dated options, what are some of the trends you're seeing there? Is there still the huge attraction? Is there more? Is that still trending up?
It's a great question. So zero DTE options, which are really just regular options listed about a month out, but they really see most of their trading activity on the final day. We have them in SPX, which is the S&P 500 index. They exist in a number of ETFs. Now they actually, although there's not daily expirations,
we got Monday and Wednesday now, right?
Monday, Wednesday in some of the super highly liquid NVIDIA, Apple, Google, IBIT. And so, and it's really only been a couple weeks for those contracts. And we've seen a pretty big uptake there. In fact, over 3 million contracts, I think, traded on Monday in those dailies, really on those 5 or 6 names. It was mostly NVIDIA and Apple and Tesla. So zero DTE trading, it surprised people because of how popular it was, but it seems to have really, it's serving a purpose. And we're seeing about a third of the market is in zero-day contracts now. And in SPX, it's about 60% of the volume consistently is in the zero-day contracts.
I want to talk about the products that you at the Cboe might be considering adding to the mix, and based on some of the trends that we've been talking about. Prediction markets, they're huge right now. We were just talking to the CEO of DraftKings, and I know you're dipping your toes into that market, and for regulatory and compliance reasons, you can't really talk that much about it. You're pursuing something with the SEC as your regulator as opposed to CFTC, but just broadly speaking, where are you going in terms of new products?
So there were comments this morning when we had earnings, and JJ Kinahan recently joined Cboe, and he's a veteran in the retail space and in the options industry, and he is really kind of driving the effort in these prediction markets. Cboe specializes in financial instruments, financial contracts, so that really is kind of where we're focusing our efforts. But we are witnessing, really over the last year or two, this really interesting coalescence of risk taking, right? So you have, options and stocks and futures have been around for a long time, but then you have, prediction markets, and it's kind of all coming together. So it's really interesting to see. We will kind of specialize in what we're good at, but really, just watching this market, and the thing with prediction markets, they're a little bit easier than options, right? You don't have to pick an expiration and a strike.
It's one or the other.
Generally, it's kind of like yes or no, and I've traded them to kind of get familiar with them. They're very easy. Options,
and intuitive too. Options, You got to know some math.
You have, and actually, we believe, and I've talked to some leaders of some firms, event contracts can be a nice kind of introduction to risk and, really paying attention to the market. And so, somebody can go from, okay, I bet yes that the Dow would cross 50,000 today, and I made $1. But what can I do more? How can I grow into expressing bets a little bit more in a more sophisticated manner? And
trading iron condors, it's a natural progression.
Well, exactly. Once you have a good experience, you start to get comfortable with these instruments in the market. Then you just kind of expand your wheelhouse. Henry, we got to leave it there. Thank you so much for stopping by. Always great chatting with you. Thanks.
And stick around. Much more Asking for a Trend still to come. A strong day for shares of Roblox, the gaming giant reporting better than expected results and issuing strong guidance. Here's some of executive editor Brian Sozzi's conversation with David Baszucki, CEO of Roblox.
2025 was a banner year. We're targeting 10% of all of the global gaming content running on Roblox. As you shared, Q4 bookings, 2.2 billion. 55% year-on-year bookings growth. Our DAUs were up 69% year-on-year. We're growing around the world. Japan, for example, was up 160% year-on-year. One really interesting fact, we have taken a lead in online safety and civility with what we call the gold standard for that. And as part of it is we've started rolling out age check for everyone on our platform to use communication. As part of this, we've found that our age-checked 18 and up segment is growing at over 50% year-on-year, which is a real great signal for future growth.
I'm going to get into safety a little bit, but you just mentioned that what looks to be opportunity with older gamers. How do you plan to go after that this year?
I want to highlight, in a sense, we've reiterated the cultural phenomena of Roblox for the under 18 segment. And what we've also shown time and time again is when we create a platform that all of our creator community can use to make innovative gameplay, they respond with cultural hits like Dress to Impress last year and recently Grow a Garden and others that have really shown new types of gameplay. With 50% growth in over 18 and the amazing creator community we have, the amazing tooling, we expect to see more and more genre expansion in genres like RPGs and sports games that a lot of the 18 and up segment likes to play. And I will highlight those tend to monetize better as well. Our overall mission, connect 1 billion people every day with optimism and civility, and create this wonderful technology stack so creators can make great content for all ages.
Dave, you have to have some thesis on why someone, let's say 25 to 35, is finding time. How are they finding time to play games? I get if you're under 18, you're still in school, you can play some games, but how are these older consumers finding time to do this and spend hours doing it?
Well, the good news is they are already finding time. You know, the global gaming market's estimated at about 200 billion every year. The US market's estimated at about 50 billion every year. And already a very big chunk of that US market is 18 and up. So just like with younger players, the market is really already there. We believe Roblox experiences are very social. They show innovative types of gameplay. More and more, we're going to see them incorporating AI for new types of gameplay as well. So the market's there, and we think there's just advantages of the Roblox platform.
You mentioned the age verification. This is something that is now hit on the platform. Looked like it impacted some metrics for Roblox. When will you be beyond that?
Our team has accepted the challenge of doing two things at the same time. The first is leading the industry with what we call the gold standard, and part of that is estimating the age on our platform. We are seeing other companies start to follow. But the other opportunity is doing this without friction. And as we've rolled this out, in parallel, we've been making really big advances in how we connect people of similar age, how we run our chat inside of the game, how we optimize other things around trusted connections. So we're optimistic that our teams are going to come out of this better than we were before.
I don't have to tell you this, Dave, but Roblox is always under the microscope in terms of safety. Do you think you will ever get to a point where this scrutiny just backs off and you will be seen as doing good things and you could just go about operating your business?
I want to highlight both the amazing responsibility it is running a platform like this with so many young people on it, but also the amazing opportunity. You know, every day, over 100 million daily active users have great experiences on our platform. And time again, really since we've got started, we've led this with innovation. On our platform, unlike a lot of other platforms, all text is filtered and monitored for critical harms. We do not allow image sharing on our platform. And now with Age Check, we can connect people of different ages or the same age in the right and appropriate way. So I'm optimistic we will continue to show leadership in this area and ultimately be defined as we are now as the gold standard for online safety and civility.
Dave, what do you think about some of these concerns that have impacted software companies about how AI is going to eat up all of these players? I mean, we've seen some massive valuation cuts so far to kick off the year.
I'm optimistic that AI is going to accelerate our creator community and allow them to build more innovative, more high quality, and a more diverse set of things on our platform and really define the future of gaming. We don't see creators being replaced. We see them being accelerated. And that can be highlighted in what we call our DevX, or the amount that creators have earned on our platform. In 2025, creators on Roblox earned over $1.5 billion. We see that number going up. And so because of that, even with all of the AI we're embedding in our platform, we see creators earning more on Roblox as we go forward.
Stick around, much more Asking for a Trend still to come. The big game on Sunday may last just a few hours, but the spending around it can deliver a powerful read on the economy. New data from Bank of America shows that on NFL game days, spending in the zip codes around stadiums jumped 77%. Here to break down what's driving that surge is Taylor Boley, economist at the Bank of America Institute. Thanks for joining us here today in studio. Very apropos that we're here talking about the Super Bowl on Super Bowl weekend. So tell us about this lift that even just regular games kind of give communities.
Yeah, absolutely. So for context, we're looking across nearly 70 million consumer and business accounts. So it's a pretty powerful data set. And what it says is that for those zip codes and these home stadiums, spending is up more than 70% around game days. And that's not just the Super Bowl, that's across a whole season. So what that tells us is that people are really out there spending and businesses stand to benefit.
And give us a breakdown between hotels, lodging, restaurants, bars, that kind of thing.
Yeah, so unsurprisingly, people are stocking up for when they're tailgating. Fans, when they're coming from out of town, they're booking out hotel rooms, and we see that quite strongly in our data. Parking is also up, probably again because of that tailgating aspect. So needless to say, there's some real strength around the season, and the NFL is a real big component of what we're seeing in sports strength overall.
So is NFL the kahuna? Is it the big one, or are there challengers there? How does it mix down the professional sports?
Yeah, that's an interesting question. And we've actually done analysis looking at the MLB. We've done analysis previously also last summer when we saw the FIFA World Club Cup come. And of course, looking forward to this summer with North America hosting. So what we're seeing is that across the board, fans come out. And so that offers a real boost to local businesses. And even though it might be said that some of this could be short term, when you think about these smaller businesses, one day can have a serious impact on revenue over the course of a year.
Yes, I remember I used to work for a gaming store, and Three Kings Day in Puerto Rico, the entire year was made on that one day. So that's very powerful. Any surprises in your data? You just said, wow, I didn't expect that.
I think it's interesting. So we looked across the 2017 through 2025 season, and we were able to break down by team where we saw the strongest impact. And who landed on top? It was the Kansas City Chiefs. Which, when you're appearing in 4 out of the past 5.
A little Swift boost, too. Who knows?
I mean, it can't be denied that Taylor Swift's economic impact is a powerhouse. But, again, when you're showing up in those Super Bowls, that doesn't help either.
Yeah, I didn't expect this to devolve into a Swiftonomics conversation here. But anything on the celebrity, I mean, maybe you don't see this in the data, but I'm personally curious, anything that attaches to like celebrity appearances, is it really the headline games, or can it be even, the games that not as many people watch? Is it still important to have that economic boost?
Yeah, absolutely. And we looked over the course of a whole season. And again, we're seeing 77% of an upward lift in spending. So it's not just a one-off thing. This is something that's happening over the course of a season, which means that that's something that also businesses can really count on.
And another thing that I saw that was interesting, you're comparing, I think your data goes back pre-pandemic, and you're seeing a 25% boost since 2019, and that's in real terms. So that takes out the effects of inflation and everything. So people are just spending more on an inflation-adjusted basis on sports. Do I have that right?
So, what we're seeing is, and that comes from the BEA, and a lot of people were talking about the concept of revenge spending, particularly out of the pandemic. Something, whether that be sports games, live events, you name it. And what we have seen bigger picture is that some of that has slowed down, but it's still up. And that's not just on sports, that's consumer spending growth across the board. Big economic picture is that consumer resiliency is still there.
Any trends we didn't get to? We got about a minute left here.
I think I would highlight again that the Super Bowl is a huge event, not just for fans across the country, but especially for where those host cities are. So for the Bay Area, those businesses, they really can benefit from a Super Bowl spending day.
Yes, indeed they can. Thank you for joining us here on set, Taylor. Really appreciate it. And that is a wrap on today's Asking for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all the latest market-moving stories affecting your wallet.